numbers.
All right, there we go. Good morning, trade pros. Welcome to our morning market update. 10 seconds to Case Shiller numbers here at top of the hour, so you might hear some background noise. All right, we got a great update for you. And let me just open up my notes. Hope you guys are having a phenomenal morning so far. We're going to talk today about a few things going on in the market, including oil, some morning market fun facts, companies reporting earnings, and what you can expect after the bell, plus the important day that we're going to have tomorrow. So this is a big one. All right, let's get started. First of all, the morning market fun fact for today is on this day in 1942, the World War bear market hit rock bottom, and the Dow Jones Industrial Average closed at, get ready for this, closed at 92.92. All right, down 0.97 points for the day. I find that astronomical, and 16.3% year to date. All right, over the next to see the market bounce back like that, right? Without any stimulus programs, the Fed now has 5 or 6 of them. And so I found that kind of interesting. I thought I'd share it with you. Sentiment this morning is back on risk on, meaning that traders are looking to own equities and risk assets. I think with the coronavirus pandemic at the moment, the focus has shifted from new infections and deaths, because we know this thing is not good. All right. And so it shifted from infections and deaths to reopening the economies and restarting life again. All right. People are getting tired of sitting at home cooped up. The fear has kind of run its course, and now we're sort of looking to, with optimism, how do we get out of all this? And so now what we're looking for, though, is the big concern. And I'm going to say this. I think the S&P at this point has priced in coronavirus. Not yet the economic impact, but the fear of the coronavirus happens at the same time. We're going down another 30% from wherever the heck we are at the time. Hopefully we avoid that. Fingers crossed. I don't want to see that. It's disgusting and it sucks. All right, but here's what that next thing is. If we get a second wave like China's having, although China's numbers, have been less than reliable most of the times. So if we have a second wave of it and casualties skyrocket, hospitals get jammed, kind of what everyone's worried about, all right, then, it's going to be very bad for the S&P, for markets, et cetera. Societe Generale is predicting a 31% drop. TradePro Academy doesn't know what percent will happen in that scenario, but we know it's going to be ugly. Okay, and according to kind of what we had presented about a month back on the coronavirus scenarios, the optimistic one is sort of playing out at the moment. Surprise, surprise. It always pays to be an optimist. Okay, and this is why markets are ripping higher and moving. You might be wondering, hey, I'm in lockdown at home. The economy isn't doing well. Why is the stock market going up? Because now it's turning its attention to the positivity that we're reopening and restarting economy and life. What's going to happen from here? Nobody knows. If we get a second wave, look out below. It's going to get ugly. Second wave coming right as these Q2 numbers are. Don't fight the Fed. There's a saying, never fight the Fed. You fight anyone else except the Federal Reserve, and the only person more dangerous to fight than the Federal Reserve is your spouse. Be careful. All right, Pfizer this morning released earnings per share of 80 cents versus 73 expected. It's pretty big. Revenue's up 12 billion. Chain, obviously. Okay, they're in the health sector. If you look at the healthcare sector, it's made a remarkable comeback from the sell-off. It's a place to have been. Okay, Merck Q1 2020 announces 150 earnings per share versus 134. Revenues climbed as well, but they lowered their fiscal year guidance to $4.12 to $4.32 from a whopping $5.56. So they're clearly impacted. 3M also came out with earnings this morning, and they came out with $2.16, beating expectations of $2.03 on earnings per share basis. Revenue up 8.1 billion versus 7.91. But they withdrew their fiscal year 20 guidance. They basically said, I don't know what's going to happen for the rest of the year. All right. Hang on one second. We just get a coronavirus update in the ear. I don't know if you guys could hear the squawk. Okay. But at the same time, could be losing a lot as well on additional production. 3M is a very interesting company. They have a whole production facility. Then they have another one built entirely for pandemics that doesn't operate ever. They flick the on switch and everything roars up to life when they need it. So they have additional capacity that they invest in that costs extra money on the thing. Obviously, they're going to make a lot of money from the masks. They're not just doing it for no profit. But it's good to have invested in architecture, infrastructure, just sit steady waiting for times of need. All right, Caterpillar for Q1 is 198 versus 168 per share. Revenue's down 21% year over year. They also withdraw their guidance due to COVID-19. So these companies are basically saying, look, here's our earnings for the first quarter. We don't know what's going to happen for the rest of the year. Okay, must be nice to be able to say that. We need to sort of, look, traders don't know. It isn't going to be estimated or compared to what they expected, because now pretty much anything's open for dropping into second quarter reports. Very interesting the way it's shaping up. Other news, oil tumbles yesterday. I'm going to take a look at the June contract right now, but this is why our oil desk manager, Steven, has been pushing us to go on margin so high, is because there's so much volatility from new traders who are on the retail spectrum who are buying futures contract without understanding what they're doing. You know, a lot of them will buy USO, the ETF, and say, oh, I don't own futures, I own the USO ETF. It's like, well, you need to read the prospectus and see what the USO puts their money into, because they're going directly into the futures market across the curve. All right, so overnight oil contracts on the June expiry, which is coming up in just over 2 weeks, traded as low as $10.07 a barrel, prompting a lot of fears that we're going to revert negative again, but we've rebounded since then. Now we're trading about 12.30 on the Junes. And, you know, here's what's happening. So a lot of media outlets are printing that USO is out there to screw the retail trader. And I'm going to tell you this. It's not a popular opinion. I'm really sorry, but you got to hear it from a professional angle. A lot of retail traders screw themselves. You know, there isn't anyone out there to get people. USO's mandate is to take money from customers and put it into futures to make it accessible to people who don't want to own futures in a portfolio. They want exposure to commodities in the oil market, but they don't want to own a futures contract and manage it. So the company says, we'll buy it for you, we'll manage it, give us your money. Here's what happens when you have the entire population in the world looking at crude oil right now and buying USO, thinking that they're buying the crude oil market. USO's ending up with a crap ton of cash, and it's unallocated. They haven't put it in futures contracts, which is why they issued the notice. You know, we're not going to be tracking the crude oil market as well as we have in the past. It's a flush ton of cash. They can't do anything with it. Put in the market, it's going to move positions quite a bit. So here's what USO has done so far. They're going to do a reverse split 8-1. I think that's actually happening today. And crude oil June contracts continue to get hammered because one simple reason: the market's oversupplied. Okay, there's a crap ton of supply, storage is full, and if you hold a futures contract and nobody wants to buy it from you, you have to take delivery of the physical commodity. We're going to put a link in the description to a great article that Victoria wrote on her blog that you must absolutely read if you're wondering how this process works. All right, so that's what's going on with crude oil. When you hear crude oil futures tumbled, it's the June contract, the one that's the front month that's about to expire in just over 2 weeks. All right, the July one isn't doing too bad, and that's the one that we've been trading to avoid this crazy nonsense. There's volatility, and there's just insane. What's happening in crude oil in front months right now is insane. So we've been pushed to go further down the curve to trade other contracts that have less volatility. At some point, as traders, you want volatility, but not the kind of volatility that skips your stop losses, puts in slippage. All right, you margins 40,000, you're inverting the negative prices. It's volatility you do not want. Okay, and so anywho, that's my rant on the USO and oil. I don't think they're trying to screw people. I don't think the fund manager there, let's screw them all, because they'd screw people out of a job because they wouldn't have a job managing money. And the trouble is there's way too much demand at a time where the company itself is struggling, where they're trying to sell June and flip contracts to go further out. That sales pressure is pushing June contracts down. The more that sales pressure pulls the June contract down, the more people that own June panic, get stopped out, and start dumping their orders on the market. The more everyone sells, the less buyers there are, because like, I'm going to wait a little bit lower. Now's not time to buy it. And that's how the price of a market collapses, till you get to the point that you got to pay somebody to take something out of your hands because it doesn't have value and it has an obligation legally that you cannot make. So you're basically paying your way to get out of a court case. All right, in crude oil futures, that's legal. In today's markets, Japan's down 0.1%, Hong Kong's up 1.2, China's down 0.2. Right, India's up 1.2. In Europe at midday, London up 1.5, Paris up 1.5, Frankfurt up 1.5, and futures in the U.S. up over a percentage point across the board. All right, crude oil, as we said, was down almost 20% to $10 on the front month. July didn't experience the same amount of volatility. Gold is up 0.1, Bitcoin's up 0.5%. The FOMC, The Fed meeting begins today. It's a 2-day meeting. Tomorrow is going to be a big day in the afternoon. We got some numbers that came out at 8:30 that weren't really that important. They're lower impact events. But 10 a.m. we have consumer confidence this morning. 10 a.m. we have Richmond Fed manufacturing. Top of the hour, expect to see some volatility and keep stops tight. Ideally be out of the trades before then. All right, tomorrow morning, huge session. 8:30 we get the advanced GDP reading for the US. 8:15 our elite room will be open. I'll be there. I look forward to trading it with our elite team. And then the room will also be open for FOMC in the afternoon at 2 p.m. All right, so an extended trading day tomorrow. So today, if there isn't a lot of opportunity, it's a slower market, you could take some sauce off knowing that tomorrow you're going to get great opportunities. All right, and the big question from the Fed is, will they start buying stocks? Okay, that's the question. They're getting pretty close by now buying ETFs and supporting the fixed income market to that extent. All right, so I love you guys. Be careful. After the bell, by the way, we also have some giant companies reporting, including Alphabet, aka Google. Ford is reporting as well, Starbucks, AMD. Those are the big names. So keep an eye out on NASDAQ futures into the close. They're going to be excited and optimistic about Google numbers. Depending on how Google reports, expect volatility. Okay, super busy day. We're kicking off this wild week, and now we got to shift it up and take advantage of this volatility. Yesterday was slow. Today you're going to start getting some opportunities. Tomorrow even more. Thursday the same. Friday we go back to being slow. Okay, love you guys. Have a great rest of your day. Appreciate you all on YouTube. Thank you for tuning in. Sayonara, Manager Risk Trade Pro. Take care. Ciao. Steven, let's open it up with some oil analysis. I know I stole some of your thunder there, actually probably a lot of your thunder, but I still love you and I'd like to hear your opinion.